All right, welcome everyone, and thank you so much for joining us. Our topic of discussion for today will be the history of consulting, past, present, and future. To give us a better understanding of this fascinating topic, I'm very excited to have with us today two special guests, so Professor Joe Mahoney and Laurent Thomas. So Joe is a professor of consulting at Cardiff University and a growth advisor for small consultancies. Laurent is my co-founder at Consulting Quest and the editor of our newsletter This Week in Consulting. We'll be discussing a lot of things today, starting from the definition of consulting and a few elements that make up the modern consulting market. We'll explore whether or not technology is disrupting the way traditional consultants do business and how firms, big and small, are responding to these changes. And finally, we'll see what this means for companies looking for advice. Is it best to go with a seasoned consultancy, or is it technology presenting viable alternatives? We'll get perspective from both our guests. So buckle up. This promises to be an informative conversation. So all right then, so let's begin with the definition. What is consulting? Well, we can answer this question in multiple ways, but first, we should really look at where the word consultants actually originated from. So the word consultants actually come from the Latin word consultare, which means to consult or to discuss. And so when we look at the dictionary and the definition of the dictionary, we see that it simply means someone who advises people on a particular subject, or a person who is a specialist in a particular subject and whose job is to give advice and information to business, government, and government organization, etc. And someone asked a question about, are independent consultants part of that definition?
The independent consultancy market has been driven in a large part by people leaving the large consultancies and taking a smaller day rate but getting more of it. So they're very often doing what they were doing with the larger consultancies, but just doing it as independent. Interestingly, a lot of the figures about consultancy exclude firms with fewer than 5 people in them, which is really annoying for an academic because it's really hard to get reliable, consistent figures.
Hélène can speak about that as she tried to prepare all the statistics. But it's true that you even have companies that define themselves as market research about consulting, and they only analyze the top 100 consulting firms. And it's just discarding, maybe, I don't know, Hélène, you know more than I do, but it's what, 30-40% of the market that is made of independents in terms of headcount?
Yeah, it's more than that. Yes, it's 70. Yeah. Well, it depends on how you count. Yeah. It depends if you count the number of company or number of people. But if you check the number of company, let's say structure-wise, it's almost 70% of the market that is made of independent consultants. It depends on countries, of course. It's a little bit different from one country to the next.
Well, in a way, consultants have started the notion of circular economy. You know, the young guys enter a large firm, then they leave, they create a small one that grows, that is acquired, and they are back in a large firm, and then they leave and they create another one. It's a loop. Anyway. Yeah.
So I guess that we're talking about the different elements that they're doing in terms of service they're offering. It's also what they do that is quite specific and how they differentiate from other. Like that's why we often use management consultants to make a difference with whatever other consultants we're talking about. And here we talk about, of course, the technical expertise. We talk about the problem-solving approach, but there's more to it than just that. There's also the fact that they have an independent take on whatever is happening in a company because they are external, and that can be, in some cases, very interesting for the clients. It can be about helping them because they need some expertise and some, skills to go over one obstacle because there's a lot of work happening and they don't have enough workforce there. It can be because they have analytical skills, they have developed analytical skills, and there's also that mention of coaching, which is coaching executive, helping them to be more effective as a team. We're touching here on the HR part, but that's also something that it's 90 days or the 100 days, that book about how to start a new job. This is consulting, but this is also in a way coaching. So this is what
the one piece I would add maybe to that page is that this page is very technical. You were speaking about the technical added value of the consultants. What we are missing a little bit here is the political added value of the consultants, being the one that is stamping a report, being the giving credibility to some ideas that indeed the management already had, but was not listened to when they were saying it alone, and sometimes being the guy that's in the room listening to everyone and discussing with the CEO and trying to facilitate things. I used to work with Mercer Delta, with Delta that became Mercer Delta, and then Oliver Wyman Delta. The Delta name was already there, and then it vanished. And there was David Nadler that was the founder, and people were saying about him, we don't know exactly what he's doing, but when he's there, we work better. And that was a beautiful definition.
Absolutely.
There's a fair bit of research that shows that consultants are used for all types of nefarious activities that aren't on this list. There was a nice piece published in the Journal of Management Studies a couple of years ago that showed that if you do a press release announcing that you're working with strategy consultants, your share value tends to go up, regardless of whether they are working on anything and whether they're successful.
Maybe,
that can be a cheap way. That can be a cheap way to increase.
Not if you're using McKinsey, it can't.
Maybe Twitter should think about this these days.
Yeah.
Is there any consultant in the war room? We don't know, right?
So we're saying we talk about what is consulting, but actually, where did it start?
So by all the small items on this list, if we reduce consulting to really advising men and women in power, we went as far back as 1200 before Christus, with Antenor being advisor to the king Priam of Troy. And then we have a lot of dates, and I will spare you all the details. You will get the handouts. The one thing we can mention as a joke is that Antenor is the one that opened the doors afterwards. And,
he's a trader.
So advising, but be careful with the advisor.
He's the only one. Well, there are some others that have.
Yeah, I'm not sure I would want to have Talleyrand. I'm not sure I would have Talleyrand in my corner either as a Frenchman. Okay.
True.
Now, I always say to my students, you don't think the pyramids were built without advisors, do you? Any of these large-scale projects, I mean, going back 3,000 years, I did Greek history for my first degree. And certainly when it came to building things like the Parthenon, you had the same with medieval cathedrals. You had traveling experts who would come in and give advice on building, growth, funding, etc. Chris McKenna, in his big book on consulting, the book is called the world's newest profession.
Yes.
In the UK, the oldest profession is prostitution.
We say the same in France.
Okay.
Yeah, that's the same expression. Absolutely. So let's move to modern time maybe then, and look at how it has evolved since the 19th century.
So maybe I'll kickstart this page and then pass the ball to Joe. Indeed, if we look at consulting as it is known today, and if we don't reduce the advising part and the expertise part, the consulting firms and the advisory firms started with work rationalization, with the consequence of Taylorism, actually, at the end of not the previous, but the one before, 2 centuries ago. That we are in the 2000 and something, and then you saw several companies popping up that were mostly working on work rationalization, and then some that were mostly on finance. At the beginning, McKinsey was also on finance. To be noticed here with Arthur Dolittle and Booz Allen Hamilton, We have Bedeau, that was a French bloke that moved to the US and started one of the companies that became extremely famous in this field, and then collapsed after the war. But that was a pretty interesting success story. The McKinsey we have here was not, Joe, correct me if I'm wrong, working on what McKinsey is doing today. It was primarily on advising clients on finance and how to optimize their finances, and it progressively shifted to other capabilities in the consulting field, correct?
Yep. I guess that the important thing to say here, and it's still the case, this is why it's important to say, is that certainly from 1880s to the 1960s, really, there wasn't really such a thing as consultancy in terms of it was a contested profession. If you asked a client who a consultant was, we have a relatively clear idea, but even now it's being challenged with the emergence of consultancies, digital platforms, and all the rest of it. So if you look at who worked in these consultancies, they were engineers, but they were also lawyers, they were also accountants. And interestingly, the people that employed them early on were banks, were American banks, because in effect they were looking for investment. So there was you could do commercial banking and investment banking. And so in order to do that work, they would outsource it to these types of companies. But you've got to remember, these companies were really, really small. So up until the 1930s, in 1920, Booz Allen Hamilton, McKinsey, A.D. Little typically had between 20 and 50 employees. They're really small companies. Now, what happened, what really kick-started consultancy as a profession was, and we all know about sort of, the way McKinsey went, and James McKinsey and Boyer in developing this, but was an act in America called the Glass-Steagall Act. And that prevented banks from doing commercial banking and investment banking, and so stopped them, in effect, delivering consultancy services to their clients. So what happened then, it was entirely outsourced to these companies that grew massively. So the 1930s was really the big growth period. But again, so it's not just about the size, it's also about what we understand to be consultancy, because certainly in the 1800s, consultancies were modeling their profession on the engineering profession.
Yeah, it's the I don't know if you have this in the UK, but in France we always have the debate between being a consultant and between being a consultant engineer conseil.
Okay.
Which is indeed an engineer providing consulting services that are very technical and specialized. And when we think about the work rationalization, is how do we organize to be more efficient? How do we sequence the work? How do we specialize people? Which is indeed nothing very, very different from what you hear today when you're working with a lean specialist. Huh?
Definitely. Yep. You can see it in every period. You can see the business process engineering, you can see the IT revolution, you can see digital transformation. And a lot of it's very similar to what was happening in the 1880s. We've just called it different things. But I guess moving into the strategy period, this was really done, tremendously well by McKinsey. And they didn't just set the growth rate because they were the fastest growing firm in that period, again, primarily in America. But they also set what it was to be a strategy consultant. So our idea of strategy consultancy now is pretty identical to what James McKinsey was trying to develop back in the 1920s. And he modeled consultancies very much on the legal profession. So this idea of partners and juniors and up or out and all the rest of it was very much this part of this professional identity that has been created. And James McKinsey purposefully tried to distance himself and his firm from the industrial engineers that he saw as a bit dirty, a bit too rational. And he did that for very good reasons, because he wanted to be dealing with CEOs. He didn't want to be dealing with factory managers. And And so it was in this period that you kind of get the explosion of strategy consultancy. So all of the terms we know about from, the experience curves from Boston Consulting Group, or the growth share matrix, or the 9-box matrix, the 7S framework, all of that stuff comes from this period. And although it looks quite simplistic to us now, it was, you had much bigger firms, you have much greater complexity. Banks weren't allowed to give this advice anymore. And so you had these frameworks which really for the first time were being, used properly. And McKinsey was at the forefront of that.
My recollection, I remember reading a book that you can read as a novel, which is I don't know if you read that one, Joe, is the Lords of Strategy.
Oh, yeah, very good.
Unfortunately, I forgot the author, but you can really read it. It's a kind of a series of biographies, and then they delve into the future, and that becomes a bit fuzzy. But the start is really gripping. And starting from the strategy, to me, it's the BCG and Bruce Anderson at the BCG that really moved the strategy consulting into a new dimension. I saw recently that he created the BCG as we know it in 1963 when he was 48 years old. So I should start this year if I want to mimic that, because afterwards it will be too late.
All right.
And in doing so, he created the internal consulting group of a bank. And that was principally servicing the bank itself, and then was spun off couple of years later and became an independent entity in the 70s, something like that. But it started as the internal consulting, which I had no idea about. And please go ahead.
Yeah, no, I guess I wanted to develop that point, and we shouldn't forget how incestuous all these companies were, because some of the staff from AD Little jumped to Boston Consulting Group, some of the staff from Boston jumped to Bain, some of the staff from Bain jumped to LEK. McKinsey's lot split off and created AT Kearney, and so even then you're getting people getting frustrated with not making partner or wanting to take the firm in different directions and jumping. But it was, I guess the key thing to say is that it was a high demand market. And so it wasn't just that firms were getting bigger. It was that you had the First World War, you had the Second World War. A lot of the organization, a lot of the questions that were being asked were strategic questions which hadn't been asked before. And so they needed people to answer them.
And one thing that we don't see here on that graph is the big four, the accounting/audit companies that grew into consulting as well before the Enron scandal.
Yeah, and then came back.
And
now it's splitting again.
And splitting again, absolutely.
Yeah, so I mean, it was the big four firms, or in fact, at the time, it was the big six.
Yeah.
So I mean, there's two things. Firstly, audit revenues or audit margins started to narrow as it became more commodified and more competition. But secondly, certainly with some of the younger partners, they realized that there was money to be made, that they perhaps couldn't, get partner by selling big audit services. So they started to turn to consulting services. And obviously the conflict of interest that we're all very aware of between those two allowed those consultancy arms to grow very quickly.
There is a very interesting book. Again, I will put it in the comments, or I will find a way to share it with you, because I forgot the author, which is about how to manage and grow a professional service firm. It's a book that's about 20 years old. But what they explain in essence is that the most difficult part in professional services is to establish the network at the top and the relationships at the top. And once... I have it in a different format, but it's probably the same concept. And indeed, what you end up having is a set of relationships that allow you to cross-sell. And once you have the top-level relationship, you can tap into the legal, you can tap into the audit, you can tap into the consulting, you can tap into the marketing, and that's why you have so many branching. And what we see today is that they are splitting again, with EY splitting its consulting division. But a conversation we were having yesterday with Hélène is that all those firms have also a legal branch, and they are not worried at all between on the conflict of interest between audit and legal. No, that part is fine. We have no issue. I don't see how this could stay if you apply the same logic.
No, I agree.
Just coming back to the chart for the auditors of this webinar, one important point that we have here is the creation of Bain & Company, where indeed Bill Bain, that was a partner at the BCG, wanted to accompany the clients into the implementation and the creation of value. And that was a big debate within the BCG. Shall we just stick to strategy? Shall we delve into implementation? And this led to a split, Bill Bain creating his own business, and then afterwards the BCG moving to some implementation, but years and years after that. And to me, that's also a big milestone in the history of the profession as we know it. The next one being with McKinsey and the 7S model and all the organization work and all the congruence model and things that were done by David Ladler and the 5-star model and so on. So there were a lot of organization projects, and there was the business of excellence. And what's the name of the book? In Road to Excellence?
In Search of Excellence.
In Search for Excellence, that was written by someone that was or became a McKinsey partner. That kind of opened the door to excellence in all the functions: excellence in marketing, excellence in manufacturing, excellence in purchasing, and this is a huge source of revenues for all the consultants, which afterwards led Michael Porter to writing a Tribune, can we say that, in the Harvard Business Review, trying to differentiate a strategy from operational excellence, explaining it's not because you're working on operational excellence that you guys are actually working on your strategy, which shows how much the operational excellence part had, how much large that part had become.
Okay.
Maybe a word, Joe, on what happened since the 2000 and the digital transformation and what's happening, because that's the traditional consulting we have been discussing, and what's up now?
Yeah, okay. So I guess there's two things here. I mean, one is that, obviously the important one is the massive demand from clients. Consultancy is always driven by clients not knowing things, and everyone on this call probably is going to struggle today with some form of IT that probably their 10-year-old can help them with better than any consultant can. But what you've got in, with the emergence of the internet, obviously, and the apps and the applications that sit on top of that, you've got high levels of complexity and need for expertise to make the most of that. That really kicked off in the 2000s, and it's well, actually, it didn't kick off in the 2000s. It kicked off in the 1950s, really. But in terms of it being mainstreamed in organizations and taken seriously, it kicked off in the late 90s, early 2000s. And so you've got the external demand. But what I also find interesting, and certainly in my role as an advisor to consulting firms, is the opportunities internally. So if you look at, and we'll talk about this later, if you look at, CRMs and professional service automation, the emergence of platforms and software, online training, online working, that is as much of a disruptor, as far as I can see, to consulting firms as the demand is for IT consulting services.
And when it comes to IT, what happened from, if we just think about an M&A strategy standpoint, is that, as I was mentioning, once you have the connection, if you have the strategy, could you sell the implementation and could you sell the IT solutions and the implementation of those IT solutions? So that's one way of going towards the IT lucrative business. And then you have the other one, which is, I have an IT business. What about kind of moving up in the food chain and acquiring a strategy boutique or even a very large strategy company like EDS did when they acquired was it A.T. Kearney? I think that was A.T. Kearney.
Yeah.
They didn't work and then they split again. But they were the first one to try, actually, to integrate an IT firm and a consulting firm.
Yeah, so I've actually been part of that. I've not only been part of that merger and acquisition, but also I've advised on some of these. And it's much easier the other way around. So it's much easier for a strategy firm to as you can see with what McKinsey have done over the last 10 years, is to develop a series of high-end, high-value, brilliant services or platforms around AI or data analytics or risk management or whatever, than it is the other way around. And from a merger and acquisition perspective, that's because of culture. If you've got a bunch of, and so this is what happened. So I was in an IT consulting firm that wanted to move up market, and they got me in as part of that move up market. But also they asked me to work on an acquisition of a strategy consultancy. We bought them, and they were all, as you can imagine, very confident, very experienced, very well paid people that had no time for expenses or process or CRM systems or anything like that. So within 2 years, they'd all left. And so the acquisition cost in probably today's money about 200 million. And the value we got from it was probably less than 5 million. It was an embarrassment. And so it's very difficult for an IT company, in effect, to... there are some examples of successes, but it's very difficult from an M&A perspective, simply because the people in strategy firms don't want to work for
But
IT.
if you take a recent example, the acquisition of InnoSight by Huron. Huron Consulting is really into systems and IT advisory. Even though, look at their website, they do everything. They are not on the upper layer of consulting. I knew some of the folks at InnoSight. Some of them left on day one, so they did not even join the journey. And recently, Scott D'Antoni, who is kind of to me, the heart and soul of this company, now that Clayton Christensen passed, left, and he's going back to teaching, but which means, in essence, okay, I got the payment for the sale of the company. I'm out of my kind of 2 years retention period, and now I'm going to do something else. And maybe in 2 years, I will start, oh, surprise, an innovation business. That will be a boutique, and that will probably progressively poach the guys that moved to Huron. But that's kind of a cycle.
I think we will discuss that a little bit later in how companies are. So if you don't mind, we'll talk a little bit about the market today. So I have a disclaimer here, is that it's extremely hard to get data about the size of the market, and it comes from many reasons. First, we mentioned that before, that market research companies tend to focus on the top 100. You're nice, it's more 20, 25. So the vision of the consulting market is really very limited. And then there are other numbers that are including IT as IT development, things that we don't really consider as management consulting. So it's hard to get numbers. The thing that we know is that the trends from one number to the next, and comparing that, it's probably true. So what we've seen in the last years is that the revenue has increased. We have a growth rate that is around 6% globally, with differences between the different regions. Of course, Europe and North America are more mature markets, so that's where you have the bulk of the market shares. More than half, 43% is in North America, where US is actually 90% or 95% of the North American market. Then you have Europe, that is mostly located on the west part of Europe, with the UK, France, and Germany being the largest countries. And then you have LATAM is a very small region and has collapsed and never really recover from the crisis. And then Asia is the fast growing region, actually, and it started with local branches of European and North American companies that were hiring consultants locally, and then it's expanding now into more local companies. So it's a region that has a lot of potential, especially considering that some regions still in Asia are still don't really have a strong appetite for consulting yet, but they're going there. Yeah. So that's some place where a lot of things are happening.
I was about to ask, Hélène, isn't that kind of a cultural thing where Southeast Asia is more, I would say, embedded with Westerner expatriates and has more appetite, and where China using consultant in China is still seen as a sign of weakness. No, isn't it?
Yeah, probably there's a bit of that. The other reason is that in Asia and in Africa and in the Middle East region, most of the large consulting firms are European and North American. And I think that executive there, especially in government-owned companies, like in China, for instance, or they don't want to work with those Europeans and Western consultants, and there are no equivalent locally, even though it's starting, but there's no equivalent locally of really well-established consulting firm with a very good reputation in strategy, for instance. Most of the consulting firms that you find in those regions that are not that are local started with more the operations and a mix of accounting / entry market entry / establishing your company. So it's not at the level of a McKinsey with a very high level strategy work. So it means that there's not really yet a big local player in the strategy field, even if, again, it's starting and we can see a few things, but it's not there yet. And I think that's mix that to some reluctance to work with consultants because it's not well seen in your hierarchy, but also it's not well seen to work with foreigners. And however, they work with consultants when they want to establish in the US or in Europe. So it means that, in a way, they might see the value, but not.
In my time with Solvay, we were using a niche company for manufacturing excellence in China because the people cost were growing 10% a year, and we had 1,000 people in one plant, and we had to do something about productivity. But they just got acquired by Accenture, so there must be also some consolidation happening in that front.
The thing that is sure is that we've done some research on the size of the companies and what offering they have in the different regions, and there are significant differences between North America and Europe are quite close, even if culturally there are some differences still, but that's more on more strategy on one side, HR, and more operation on the other side. But it's not that important. But what you see in Africa and Asia, it's the size of the companies that are much smaller. So you have the big names, and they dominate the market and then drive the market. But then there are smaller firms, but they're much smaller than what you can find in Europe and North America. But it's changing slowly.
Do you have an opinion on this, Joe?
So I've done a fair amount of research on this, and people often get the idea that Europe is full of consultants, and it's not. Up until recently, 80% of spend on consultants came from 5 countries. So that was the USA, Canada, the UK, France, and Germany. And that is slowly changing. So that was 10 years ago. Now it's down to 70% as spend on consulting has increased elsewhere in the world. The biggest correlate so there's 2 things. One, post-war, there was a big reaction in some countries, as you can imagine, against American ideas. And so whilst America was very good at spreading its ideas to Anglo-Saxon countries, there were lots of countries who had been recently defeated by the West who were quite reluctant to pay large sums for consultancies. Now, that got slightly changed under the Marshall Plan, because when the Marshall Plan came in and these investments came in order to ensure that US money was well spent, a lot of the US government, in effect, would insist that American management consultancies went in to make sure the money was being well spent. So that's one thing. But the other thing, I did a quantitative study of correlates of national culture with consulting spend. And that was really interesting because, perhaps unsurprisingly, certain characteristics of national cultures correlate highly with consulting spend or with the lack of consulting spend. So countries that have very high individualist measures, such as the US and the UK, spend a lot on consultancies. Countries that have high levels of collectivism don't, because they tend to go to people within their network. So I went to Italy. Italy's, a developed economy like, the UK, France, Germany, but they don't spend money on consultants. And when you go and ask, when I went to ask Italian clients who they went to for management advice, they would rather go to their competitors than go to management consultants, because the idea of going to someone external was absolutely crazy when you've got your competitors, your friends, and they'd say, "Oh, Luigi, my brother's friend's sister's an expert in." So it was always someone they knew. In Germany, post-war, they developed very strong government institutions, sort of government industry institutions that the UK and the US doesn't have, because, again, it's all about free market, neoliberal capitalism, as opposed to what they have in Germany. I could talk about this forever. I won't. But in short, the post-war reaction to the US, and secondly, the cultural characteristics of each country are really important in determining how much they spend on consultancy per head of capita, even when adjusted for GDP.
To add to that, I would have 2 points. One, we don't see, especially in France, for instance, large consultancies that are not American. And the way the American companies are shifting the perception is by having French partners as the managing partners of the local office. But sure, it's still an American firm painted as a French one. But that's what's happening. And the second one, speaking about what you just mentioned on the culture, is that having worked as a consultant on both sides of the pond, in France and in the US, I could see a French-German culture that is more about operations, hard things, optimization, and so on, and much more leadership development, team effectiveness. All the soft dimensions were 1,000 times more developed in Anglo-Saxon countries.
Yeah. I mean, there's a cultural fit, but also we shouldn't underestimate the impact of the historical emergence and evolution of institutions that compete with consultancies. So in Japan, for example, it's entirely normal, you wouldn't do this over here, but it's entirely normal for clients to go to banks or even to go to universities to get their advice. And the universities are much better at developing those types of relationships.
Interesting.
Because over here, you wouldn't go anywhere near a university.
Hélène is working a lot, and sometimes she brings me in, with Middle East clients that have developed, it might be too strong, but a kind of allergy to working with American firms due to their pricing strategy. They know that the client has money. They are charging a premium that is 2-3 times what they would charge clients in other countries. And they have noticed that, especially as a lot of the managers are indeed Europeans. And they are calling Hélène and Consulting Quest to say, okay, could you help me to find alternatives to these guys, because I feel stuck.
Yeah, and there's a dynamic within consultancy where a lot of the larger firms have become quite commodified and standardized, and the leverage ratios have gone up and the level of innovation has gone down. And so I think a lot of clients are getting dissatisfied with the performance of even some of the large strategy consultancies and turning to boutiques.
Hélène, how are we doing on time?
I think we need to move on. So one thing that we have a lot of contribution in the chat and the questions. So what I suggest is we'll do a follow-up where we'll share with everyone all those contributions that are really adding to the conversation. I can't share everything here, but so I will go fast on how it's organized. There are also a question about internal consultants. Can a consultant be an internal working from within the company? Yes, it's called an internal consultant. Here we're really talking more about external, but we will touch upon a little bit internal as well. How it is organized, usually you describe the industry in 2 dimensions, 3 if you take the region. We discussed, I think, largely that topic, so I will focus mostly on this. So more or less, again, it's not an exact science, but the idea is that companies are usually either centered on an industry, so they serve an industry in several capabilities, or they are mostly capability centered, so they are specialists in one capability and they serve several industry. And at the crossing of those two, you will find niche consultants, niche boutiques that are really very, very focused on one industry, one capability. There are some gems that we found when we were working. For instance, you know that there are companies that are specialized in the medical device industry in the US and only the marketing side of it. Yes, there are some, and I think you have a quite that's thriving. So it means that there's a business here. So here, this is how it's worked. And of course, one-stop shops tend to cover everything in all dimension, in all capability. But as you mentioned before, they still have a core expertise. That was where they started. And the idea is really to really understand what a company is good at, because that's where you want to work with them. That's it. And everything else they do, even if they claim that they do it, they might not be the best on that specific side. So again, I will go also fast on COVID. And it's funny because we didn't have exactly the same numbers on that. Again, it's really hard to get the numbers. So I changed this one, and then I didn't. There was a mix, but the idea is the market contraction. There was a market contraction or stagnation. It really depends on how you check the numbers and what you look at. But there was an impact of a COVID and a pandemic on consulting, and mainly linked to the lockdown and the restricted travel, at least on the first period. And then the consulting started again, and there was a rebound. And actually 2021 was a good year. If you look at the number of the FICO, the European Institute for Consulting, you see that the numbers are on 2021 can be up to 16% growth, even in large countries like France, and which is pretty much unheard of, I think, in France. And it's still continuing in this year. So, and we know that the current period might change things, but it was still growing fast. So it's not a structural crisis. It's something that is linked to the global economy. And that's the same thing right now with the crisis in Ukraine. The industry that got the largest, that has the largest market share is the bank and financial services, insurance. And the fastest growing sector, without any surprise, I think nobody will be surprised about that, was the healthcare and life science. That makes sense again. So I think that we should kind of move on to the next part, is like disruption. I think this is kind of what's the future. We talk a lot about disruption on every industry. We say everything is being disrupted. There's a lot of talking about consulting being disrupted. Is it really? And that's going to be the next part, is that, first of all, is consulting a good candidate for disruption? Laurent, that's on you.
Sorry, I had placed myself on mute as I was trying to kind of answer to some questions on the
Sure.
side. Well, I looked at what are taking a strategy hat here. What are the key elements that make an industry prone to disruption? Usually, what you find is high margins. So someone coming with a good idea and a lower price could probably snatch some business. That's one. Do we have high margins in consulting? Well, definitely. So I would definitely tick that one. Industry rather consolidated, so that can be attacked by smaller players. And here, I wouldn't say the industry is consolidated. There is a top 10, definitely, but there are so many other players that maybe it doesn't fit exactly the definition. Degrading customer experience. And just ask around yourself, how many clients are actually satisfied with the return on their investments? That one is a good one, because the industry would not be a 300 billion industry if clients were not seeing any value in it. So there is definitely value in it, but not for everybody. And not everyone is providing value. So that one is a half full half-empty answer, but there is definitely room for leveraging the insatisfaction of some of the clients at least, and find some interval here. High level of intermediation, I'm not sure that one really applies. It's kind of a direct setup, and removing the middleman here would not really help. High regulatory entry barriers, I'm not sure that one is also applicable. Technology is outdated. It depends. And if you had asked me the question 10 or 15 years ago, I would have said that not much is happening, especially with the large consultancies. Now the trend is a bit shaping up, and I will come back to that in a few slides. But when we look at that slide, I would say that the industry is a good candidate, even though it's not the most obvious candidate for disruption. And it's definitely not a candidate in the sense of we will disrupt consulting the way Uber has Uberized the taxi industry and so on. All this is not, in my view, Joe, you might have a different opinion and please jump in, but it's not, in my view, an industry that you can Uberize. You can create some marketplace and attack some low segments and low-hanging fruits, but you will not completely transform the consulting industry with a few marketplaces.
Yeah, so the two big arguments that are for disruption that everyone has jumped on have been done by Clayton Christensen and where's the other one? It's those guys. This one, the Future of Professions by Susskind and his son, Richard Susskind and his son. Future of the Professions. It's a reasonable book, but what they've both done is they've looked at the legal industry and they've said, well, look, the legal industry has been completely disrupted. When I went to Oxford as an undergraduate, and all of my colleagues were doing law, and they were saying this was in the 1990s. Oh, we're going to go into law and make a fortune. Well, of course, they're virtually on minimum wage now, because they're, apart from the ones who went into merger and acquisition law, because law has been disrupted. The argument of Christensen and Susskind has been that consultancy will follow law, and it hasn't and it won't, in my view. So I think there's an evolution rather than a revolution. I don't think consultancy is being disrupted. Bear in mind that Christensen wrote his piece, over 10 years ago. McKinsey, Bain, and Boston are still the big brands. You've got the big four still doing large amounts of audit work. Accenture has continued its big trend. The big names are still the big names. They're doing slightly different things in some places. But in my view, the key thing about the big consultancies is they have the client networks tied up, and expert, innovative knowledge that clients are going to pay a lot of money for is based around long-term trusted relationships and innovation, and it's very hard to commodify those things.
I was about to say exactly this word. If you compare with legal and all the legal tech that you see all around us, and all those platforms that are helping you to write a contract, all the basic contracts that were extremely repetitive and where you just had to change the name of the client, change the date, change a few things, and then you were done and you were selling this for a lot of money. All this has been commoditized. But in consulting, unfortunately, that's not exactly how it's done. You might be able to do it on some market research, and we see that with some of the new companies coming in that were previously providing external research and that are now trying to compete with the consulting firms by selling their services directly to the end customers. But you cannot, when it's about working with the people, embarking them, making them building the trust, creating a relationship, helping them to think, and taking the time you need to kind of shift the mindset and so on. You cannot have a computer doing that. I mean, you can maybe, but in 50 years, 100 years, I don't know, but not today. Not today. I see Hélène playing the timekeeper. When we look at the disruptions that are playing in the industry, we have here a kind of a 5-force analysis looking at the supplier power. No major change to expect here. Threat of new entrant. There are new companies coming in every single day. I don't know how many consulting firms are created, but there is nothing that we have identified in the market that could be a huge threat for the existing companies, unless there was a political push if Europe suddenly was saying, hey, we need our own large consulting firm, and that's where we'll place 50% of our consulting budget in the future, and the same was happening in Asia, and the same was happening in the Middle East, then you might have an impact. But for the time being, honestly, we don't see a major threat there. If we look at the substitution, you have internal consulting. That could be a non-consumption substitution, because you use more your internal resources. Here, my take is that it's a kind of, the trend in fashion or fashion. I don't pronounce it properly. Fashion. You see internal consultants. You saw them in the 90s. Then they vanished. Then they came back. Now they have a new brand name. They are centers of excellence or excellence centers or leading operation gurus or process and methods. But this is a way to reduce your consulting fees and your consulting costs, and at the same time to develop your internal resources that can reduce your overall consulting bill. So that one could be a threat, but it will never be more than a fraction of the overall budget in my view. You have experts. That one is an interesting one, using the expert networks to get access to some information where indeed you run 5 interviews with experts and you get pretty much the same conclusion that you would have gotten by buying a consulting project. I was using that a lot when I was running strategy with Solvay. Instead of buying a consulting project for 75K or 100K, you buy 5 interviews from GLG and you have your result. Research, you can outsource research to specialized companies. So that's also an interesting piece. Again, it's not the lion's share of the business. And you have the marketplaces now for talent that are trying to capture, I would say, when you need a small team to help you on something for a very specific project, it's pretty flexible model. But it's not something that will run a PMI for you. If you want to manage the integration of 2 mammoths, you will not do it with a marketplace project. And
there's one thing that, to bounce on what you were saying about the experts and using that. I think that one thing that you have not mentioned here is the fact that the people who are now running the companies that are the executive have changed as well.
Yep.
They have a strategy background. They have worked as consultants before. And so they need less of the methodology support than they used to maybe a few years ago. And that's why, and you are a former consultant yourself. Yeah. So you know how to do a strategic work. And the reason why you only needed the experts is because you know how to do the rest. And I think
because you need the firepower. If you want to run a benchmark over 40 different plants and embark everyone, you cannot do that with the 2 guys you've been granted in the budget. Yeah. You just can't. You need to externalize. I don't know, Joe, when you look at what's affecting the industry from a disruption standpoint, do you see things that are worth nothing beyond what I have on this page?
No, not really. And I think we're in agreement here. I don't see disruption. I don't see revolution. I see evolution. And a lot of these forces have been going on for 30, 40 years. I do see the other thing we haven't talked about, I guess, in here is the shifting merger and acquisition landscape, the cost of debt, and the pile of cash that private equity have needs some escape, and so they're increasingly looking at consulting firms to invest in. That means that there's greater reward for people to leave, start consulting firms and grow. So if you look at the number of consulting firms that started, grown, and sold, that's increased, not exponentially, but it's increased very significantly over the last 15 years.
Mm-hmm.
So moving on to the next step, which is how are consulting firms adapting? Because we're saying, yes, there's not much change, but there's still changes in particular in the access to consulting that we discussed about the expert, the market research that are not accessible to clients directly. How are consulting firms, adapting to those changes?
So indeed, what we have done, I think we broke it down into 2 parts. One part, which is looking at what are the big guys doing to maintain their seat at the top, and then how is the rest of the population adapting? And for that page, I spare you all the details. You will have the handouts. But if I had to summarize, I would say that the big guys are seizing the wave of new opportunities. So everyone is embracing digital. Everyone is embracing sustainability. Everyone is in whatever shape or form embracing more and more implementation consulting, and you see this all across the board. Cyber security, also all those topics that are very trendy topics. Everyone is in there. I don't know. I don't know for those that are in that call, but I was probably called 10 times in the last 9 months by search firms that were looking for a head of sustainability. I don't know what in my profile gave them the idea that I would be a great fit.
I would like to know too.
Yeah, you would like to tell. That was just unbelievable. They were all so kind of starving for people that could lead. And if you look at the announcement from those firms, everyone has a new head of sustainability. Sometimes they have recycled an internal guy that used to be a financial services guy and that is now the new champion of sustainability. But you have head of sustainability all over the place. The second thing is that you see more and more platforms popping up, solutions popping up. Someone was telling me that McKinsey is now making more than 30% of their business through solutions. I don't know. I don't have the exact figure, and it's not a public company, but I would not be surprised if all those solutions around pricing, about benchmarking, about spend analysis were providing a recurring, hefty stream of money. Even though here, I think there is a room for disruption, Joe, because we, for instance, at Solvay, had developed our own pricing tool that I considered 10 times better than the telescope tool from the periscope tool from McKinsey. But we never decided to kind of spin this off and create our own offering to push it to other chemical companies, But I'm pretty sure that at some point, the productization, and maybe you'll touch that in a few minutes, the proper productization for the medium-sized companies could be extremely disruptive. And also, when we think that in doing that and in entering the software space, the big consultants are entering software, you could think about the software guys trying to go the other way and tap into some of the lucrative areas that the consultants have developed. So lucrative areas at risk, in my humble opinion. In M&A, you can see you have acquisitions all over the place. And what the capabilities they don't have, they buy. And I'm not sure the authorities are very active in making sure that there is no dominant position created and checking the issues of antitrust and so on when acquisitions are taking place. And you see acquisitions everywhere, be it McKinsey, Parthenon, Accenture is... if you look at just check the Accenture website, you go to their press release, they have an entire section for M&A. They have an M&A every 2 weeks. They must have an M&A integration machine internally. And then, even though it's not detailed, all of them have now alliances with the big tech companies, be it the GAFA, be it Microsoft, be it SAP, Shopify, Apple, whoever you want, they all have partnerships. What those partnerships entail is still a mystery. But they have clearly hundreds of partnerships and alliances displayed on their website. Accenture has created a joint venture that's extremely profitable, which is Avanade, together with Microsoft. So we can see those moves. So if I summarize, the big guys, they want to consolidate their position. They have growth by selling more, buying companies, innovating in arenas that are kind of a new venues for growth, and developing solutions. That would be kind of the nutshell summary. Joe, you want to speak about what the rest of the world, except the 8 guys I just mentioned, are doing?
So yeah, so my for those on the call, my specialism is sort of boutique consulting firms, and I think actually there's been more disruption here because the cost of business for these firms to do good productization, to do platforms, to do CRM, to automate their services has collapsed. And so, 10 years ago, if you look at David Meister's book, written 22, 23 years ago, he's got a whole chapter on faxes and nothing on emails. And the cost of finding new clients, finding people's emails, outreach, automating your payroll, whatever it is, has collapsed. So it's become a lot more easy for smaller firms to make a profit. In theory, the other side of it, of course, there's a lot more smaller firms starting up. But as I said before, there's now this explicit strategy to grow and sell firms. When I started consulting in early 2000, people that left the big firms, they left them really as a lifestyle choice. So, the lifestyle consultancy, where it was one or, a small partnership, was very much, what you did if you didn't make partner. Whereas now it's a reasonable way to generate a big pile of cash, perhaps not as much as if you'd been partner at McKinsey, but it's getting harder to be partner at McKinsey because the leverage ratios are so much higher. So in terms of what the smaller firms are doing, I've put a few points here. So number one is the grow to sell strategy. And there's much better advice around these days for firms that want to do that. So there's people like me, and there's a few others that give advice on this. Whereas previously, if you left, Deloitte and started up your own firm, you might be a great consultant, but you probably don't know how to run or grow a consulting firm. The associate model is much more accepted now by buyers of consulting firms and private equity. It's kind of seen as the norm. So it used to be that if you had less than 20% associates, no one was going to touch you with a barge pole. These days, especially in the IT and perhaps HR areas, boutique firms can have up to 50 to 70% associates, and still, as long as they're showing they've got intellectual property, they can still sell. Automation, I've mentioned how cheap it is for professional service automation and CRM systems. There's been a huge move towards partnerships and software reselling. So partnerships, partnering with other firms and either getting a referral fee to getting them into your client, or bundling together with different boutique consultancies to compete with some of the bigger guys. And some of the government spend has prioritized that, but also reselling software for others.
Sometimes the government spend is misleading. There are, for instance, some people here in this call. We were discussing with last month that indeed are answering to government tenders through another consultancy because the government was not very smart in the way they are asking for services, and they want only to have companies that are above a certain threshold. So indeed what's happening is that the expert companies that should have answered directly have to answer through a larger firm that will take a cut, and then it's costing more to the government.
Definitely. I mean, the UK has tried to do this sort of minimum spend on boutique firms from government spending. Some people tell me it's working. Some people tell me it's made no difference at all. The fifth thing you've seen a huge amount of is firms developing their own SaaS software or having a platform. The reason for that is, firstly, it's very cheap to do it these days. You can, I've just had a piece of software developed for £8,000 and it looks bloody good. I don't know if it's going to sell. But also, if you can turn your consultancy firm into a software firm, you double the multiple that someone will pay for you on profits. And finally, number 6, the focus on innovation. As I said before, a lot of clients are getting quite sick with the standardized, commodified approach of the larger firms, and they're turning to boutiques for real innovation. So a lot of the larger boutiques are what I would have seen McKinsey being 20 or 30 years ago, offering really bespoke, tailored services, whereas a lot of these firms have now gone down the servitized route and they're not offering the levels of innovation that they used to.
What about the partnerships model? Because if I look at one thing that is hindering the growth of medium-sized consulting firm, in many cases, it's the P&L. You find a P&L in the middle, and then all the collaboration is collapsing because everyone wants a different cut of the pie. And it's already difficult when people are in the same company.
Yeah.
So when they are not, how do you make this work?
So, I mean, as with all of these things, trust and familiarity is crucial. But what I've seen a fair bit of is firms collaborating so they can charge higher day rates. To get bigger projects. So if your competitor is Accenture and KPMG, you can still charge 1,500 a day and come out as the cheapest provider. Whereas because you couldn't go for that size projects before, because you were such a small firm, you'd be, in effect, bottom feeding and charging fairly low day rates. And that's, I'm exaggerating to make a point here.
Okay, no, that makes sense. One piece I would have expected here, because we get a lot of calls on this, is internationalization. Looking at ways to kind of grow beyond your own borders.
Yeah, I guess I always advise firms against it until they get to a certain size, because, as you know, opening an international office is pretty much just like opening a new consultancy, except in an area that you know nothing about, and there's a lot of risk and complexity with that. But when firms do get to a certain size, then obviously it's a logical move, especially if they're clients.
Yeah, the moves we have seen are not moves where you open from scratch. There are more moves where we are asked, thanks to the database and stuff we have with Consulting Quest, to identify a company that would be suitable either for an M&A or for a merger.
Yeah. Yes. Yeah, and that's something. Certainly, if you're a boutique firm and you want to compete, it's something that you're probably going to have to do. But it depends on the risk appetite of the shareholders, and I guess their ultimate financial ambitions, because it's an easy way to lose a lot of money, as you know.
Absolutely. And to your point, Joe, most of the time when they're not looking for a merger, it's because they want to accompany one of their clients who is global.
Sure.
And they want to be present in the other side of the pond. That's usually the case. Most of the demands are, US to Europe, Europe to US.
Yeah.
And the one thing I would add, and maybe it goes to the international dimension, is that we see with Hélène a lot, because we have this global footprint, a lot of difference in the way companies are adapting between one region and another. And if you take France, for instance, most of the consultancies are bloody lagging, and that's terrifying, because they are selling consulting like their dad was selling consulting, and everything that's happening around digitalization, around digital access to information, about measuring the performance, all these kind of things, they are just alien to them.
No, marketing as well. They don't believe in marketing, which is kind of crazy when you look at what is happening in the US, for instance, which is probably the pioneer on that field, right? We can agree on that, including small and mid-sized consulting firms that are very present on the thought leadership side in marketing and creating and showcasing what they do in Europe and in France in particular. That nothing much is happening. There are some companies that have that, awareness and are trying to do things, but what is funny is that, to put myself from the side of the client, because these are people I talk to, this is procurement leaders and executives that are buying consulting, they are there. I mean, the difference between buyers on both sides of the Atlantic is much smaller than the difference between consultants themselves. And so they are looking for that, and of course, the language is always an advantage for a local company to speak the language and understand the culture is a plus. But in Europe right now, as we go and companies tend to kind of work in different countries. You have company from Netherlands that are working in Germany, German companies working in France. So it's starting to move around. And then those who are not able to showcase their expertise, because that's what we go to them, those small to mid-sized company, they will be at a disadvantage, I think. And I think that's a great segue to, what does that mean for client and the conclusion to that call. So we're trying to kind of summarize that and making a quote that you do about nothing then. So again, we saw that there is room for disruption, but the thing is, and I think that you will agree with us, that on the client side, the value is still very linked, the perceived value is still very linked to the brand, especially since there's no measure of performance yet that is shared across the industry. And meaning that when you're a small company, it's sometimes hard make people understand that it's not because you're cheaper or less expensive that the quality you offer is lower. It's not necessarily related, and specifically on certain very niche expertise. So a lot of changes are happening, but nothing major yet. And there's one thing we didn't talk about, which is the self-inflicted wounds or inertia from clients. And in particular, the way they build their procurement for consulting is just killing their ability to work with small and mid-sized consulting firms. I'll give you two examples. One is qualification. They make qualification so hard and so complicated and so long that it's not worth it. That's one thing. The other thing is that I've heard about, I won't name them, but because that was a confidence, but 180 days for terms and conditions for payment. 6 months. What company can afford that? Unless they're McKinsey and BCG? No one. And you just cut yourself from all the other consulting firms that are extremely good at what they do, and small consulting firms that can bring expertise and seniority on field and flexibility and all of this. So this is
you work with A.T. Kearney, Bain on procurement. They look at your indirect spend. They say that you need to cut the tail. So you cut all the small guys, and you're forced to work with the big guys because they are not in the tail, which is a self-serving recommendation.
Yeah, but even without that, the way they look at e-consulting, not knowing so well what consultants do really, they take a very high-level stance on it, and therefore they have strategy. Strategy is a very, very, very large, capability. We all agree on that. We talked about high-level implementation and other. If you take that as a whole, and you want 2 or 3 suppliers per capability, the only ones that can do it or still say they can do it are the big ones. That's it. A small consulting firm is rarely on the whole spectrum of that capability. And that's going to be the same for operations and the same for everything.
I used to be a judge for the MCA Consulting Awards. And of my whole time as a judge, I never saw one consulting award winner that had gone through the procurement tender.
Oh, that's interesting.
Yeah. Shows you.
Interesting. But
sorry, go ahead.
No, I was about to say something again about the clients, but I think we should run to the next step and then a few questions maybe, and then wrap up because we're already half an hour.
That's okay. So where could disruption come from? So from what I've heard is, the conversion between digital and consulting. There's digital solutions, a lot of happening here. Then another thing we just discussed that is company allowing themselves, let's put it that way, to work with the right consultant for each project. And it means that sometimes it's going to be the big ones, sometimes it's going to be smaller ones. It really depends on the project, on the exposure that has the project, on the need for expertise, etc., and the budget they have as well.
And to this point, if I just give an example, to convince the executive committee of a large company that your strategy is the right one and you want to go in this direction, using a niche boutique that nobody has heard of might not be the best idea. And using a big brand could be what you need. But then afterwards, when you are in the implementation and when you are in the operational excellence and you want to optimize your processes and your operations for a given plant in the middle of Asia, sending McKinsey consultants at £4,000 a day to do the job when you could find guys that will do exactly the same job for half of this, if not a quarter of this, makes no sense. Just no sense. No offense. They are great guys, and congrats to them to be able to sell their services at this premium. But from a client standpoint, as long as the client accepts the situation, I was discussing with the head of procurement no later than last week, who told me the guys in the company, they are working with a budget, so they don't really care about the savings. As long as the clients are in this state of mind, there is no reason to really change the way things are working.
Absolutely. So then the unbundling of the value chain, we discussed about that access that we have, that or of different elements that were before just in the black box of consulting are also something that could bring disruption. And we're talking about the solutions. That's another part of that value chain that could bring disruption. And finally, we discussed about it having smarter consulting sourcing practices. And because, of course, procurement is more and more in the middle of it, but they're not yet savvy enough about consulting. And either they're not even involved, and I'm not joking, sometimes they don't know a thing about consulting. They're not involved at all, which is not a good thing, because they're the ones who know how to buy. And sometimes they're too involved and they become the bottleneck because they're just buying. You have that example from RATP. What's that, RATP or SNCF, Laurent, with the railways company, where the guy asked you to have a 10-year warranty.
Yeah, that was part of the general provisions. My deliverables had to be warranted for 10 years.
So this is kind of the problem on that. Do you have anything you wanted to add to that conclusion? And what does that mean for clients, Joe and Laurent?
I guess in terms of the clients that my own clients have, there's long-term trends here. So they're more sophisticated. They're telling the consultants what they have to do rather than asking their advice. There appears to be this shift between, and it's affecting the consulting market. This is anecdotal. I can't prove it with figures, but in terms of my clients that are doing stuff that, in terms of consultancies that are doing stuff that clients could do for themselves, their day rates haven't shifted for the last 10 years. It's not Donald Trump, who was it? Rumsfeld's terms. It's the known unknowns and the unknown unknowns where the really high day rates are. So wherever your consultancy is, for people on the call, be thinking about what are the known unknowns and the unknown unknowns for your clients, rather than the stuff that they already know how to do. They're just getting you in because they can't be bothered to do it for themselves.
No, yeah, absolutely. And we're going back to what value you bring and what impact the clients get from the consultant they work with, actually.
Yeah.
All right. So that's a wrap up. Thank you, everyone. So we won't have the time to take questions, but don't worry. We'll go through them and we'll make sure to answer most of them. There's so much information in the chat and in the question that we will make sure to make a follow-up email for everyone and try to answer the questions. The handouts will be available at the end of the session, so you can download them. And the recording will be available. We had a very small technical issue at the beginning because of everything. And the very, very beginning is missing. So, but we will complete that. Laurent and I will complete that. And so you will have access to that almost complete session tonight. And then next week on our YouTube channel, you have access to a more complete video, but it's going to be available. And you will be able to re-watch or share the session if needed. Thank you, Joe. Thank you, Laurent.
Thank you, everyone. Take care.
Thank you, everyone. I hope you enjoyed it, and as much as we did. Thank you, guys.
Bye, everyone.